Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. The gold to silver ratio is a great way to tell which is the better investment at that point in time, being silver or gold. See, the gold to silver ratio shares how many ounces of silver it takes to equal or amount to 1 ounce of gold. Now, historically, the ratio is around 50 to 1, meaning it takes 50 ounces of silver to equal 1 ounce of gold. That's around an average ratio. Now, back in the day, we saw the ratio as low as 2.5 to 1, meaning it only took 2.5 ounces of silver to equal 1 ounce of gold. So you can exchange 2 ounces for silver and get almost a full ounce of gold. Right? And that was back in the day when silver was seen as magical, as it could purify water. It responded so well with certain elements. And it was a gift from the gods in biblical times, in Egyptian times. And over time, the ratio got a bit higher, around the 16 to 1 range. And this is when everything went south. See, 16 to 1 is still a pretty high ratio because gold only comes out of the ground relative to silver at 8 to 1. Every 8 ounces of silver we dig out of the ground, we roughly find 1 ounce of gold. And that ratio is actually smaller than 8 to 1 because right now people are focusing more on gold, lead, and zinc. So more gold is actually being dug out of the ground than silver is. So for the ratio to be 95 to 1 is extremely high. You can see how over exaggerated the ratio is at 95 to 1 when we've seen it as low as 2.5 to 1. And it only comes out of the ground 8 to 1. So a correction has to take place. So what does this mean? This means that gold is either really, really, really expensive, or silver is either really, really, really cheap. And gold is sitting at around a natural price. So if gold is sitting at a natural price, this means that silver is extremely cheap. And this is one of the several reasons why silver stackers see silver having so much potential. Silver is a ticking time bomb. The gold to silver ratio is one of the best tools to use to tell which metal is performing better, because this ratio means that gold either has to depreciate or silver has to appreciate, because trust me, this ratio is not going to stay this high for too much longer. Back to what I was talking about, when the 16 to 1 level was when everything started going south. In the 30s, FDR changed the gold to silver ratio from 16 to 1 to 75 to 1. And what that did is put silver at an extremely manipulated and undervalued state that would never recover. We've never seen it recover since then. The ratio has gotten somewhat smaller, like in 2011 when we saw $50 silver. So let me put it this way. For the ratio to be 16 to 1, that puts silver at $100, almost $90. If gold is at $1,500 and the gold to silver ratio goes down to 16 to 1, that puts silver at $90. And that's actually somewhat believable. $100 silver is somewhat believable. Why? Well, because in the last 40 years, silver's been $50 twice already. So going ahead in time, think about silver being $50, $60, $70. The ratio could, and that's if gold stood at its natural price, or at its current price, I mean. That means that we would see this ratio back down to the 30 to 1 range. And that's maximizing it. So these ratios really do mean a lot to the investor, and you need to keep an eye on the gold to silver ratio, because sometimes if the ratio is lower, this means that gold is outperforming silver. Like right now, this means that silver is being overperformed by the yellow metal. This means that you made more money investing into gold at this period in time than you did silver. But when the ratio goes back down, that means that silver's overperforming or outperforming gold. So you can use these ratios to kind of bounce back to your advantage. And there's also ways to earn free gold or free silver by exchanging one for another as the ratio fluctuates. For example, if the gold to silver ratio is around this 95 to 1 level, you can trade an ounce of gold for 95 ounces of silver, and then once the ratio goes down to the 75 to 1 level, you only have to change 75 ounces of silver for that 1 ounce of gold, and you still have all those extra, that 20 ounces of silver in your pocket. So you have 1 ounce of gold and 20 ounces of silver simply by trading, gold for silver or vice versa. And if you're going to do this, I highly recommend using Bullion because you don't want to have to pay the premiums attached with those coins. Now, gold does have its benefits. I don't want to just keep smashing gold. I don't want to keep bashing gold because gold can have its benefits. Silver is extremely convenient. It's the most highly conductive metal for thermal conductivity and electricity. No other metal performs the way that silver does, right? No other metal does. And silver is used so widely in the technological world that we're advancing in, and we're going to need more and more silver. Scientists found a way to make silver 40% stronger without losing any electrical conductivity. It's used for dental alloys, space equipment, solar panels, electric vehicles, medical. There's colloidal silver that's being popular, and it actually might find a way to kill viruses. And silver is just, it's used so widely, right? So why, and especially looking at the gold to silver ratio being so high, why would someone even waste their time investing into gold? Well, even though silver does have more potential, and if in 10 years from now I'll put all my money that silver is going to be the one to make you the most money by far, but gold has its benefits. Gold is a perfect way to store a large amount of money in a short space or a short area. You can fit $100,000 of gold in a shoebox. You cannot fit $100,000 of silver in a shoebox. I mean, it's that simple. So some people, especially heavy investors, serious investors to that magnitude, they need storage room, and maybe gold is a way to minimalize or cut back some of your storage area. A lot of people try to, take security seriously, but when it comes to that magnitude of investing, you really have to think about that type of stuff. See, gold it's just not, it just doesn't have the same potential as silver, and it's as simple as that. People always ask why silver, not gold. Well, these are the reasons why. The ratio is extremely exaggerated. Gold has already, had its time to shine. Now it's silver's time to shine. Now it's silver's time to shine. And because people see gold more of an asset and silver more of a commodity, and I actually beg to differ. I think that silver is used more in electronics, more for technology, more as an asset, and gold is used more for jewelry, more for, coinage and bars. See, a lot of gold is remelted and recycled, reused, rescrapped. Silver is lost in technology. So this silver that we're digging out of the ground isn't going to be recovered. So the gold to silver ratio is showing that yes, we have a metal that's, the metal, the gold price or value compared to silver is extremely high, but then we have this metal, the silver, that is extremely undervalued. A lot of it's being lost. Its fundamental uses are just as valuable, just if not more valuable than gold. And there's a shortage on our hands. So why is the ratio so high? That's the big question. I don't know why, but I do know that I'm going to be investing into the one that has the most potential. I'll tell you that much, and that's definitely silver. The gold to silver ratio will not stay 95 to 1 for too much longer, meaning that silver will appreciate. And silver is gold's little brother. So when gold moves, silver moves. And if we see gold moving higher, rallying, trust me, silver will do the same thing to a higher extent because silver is more volatile than gold. There's higher volatility in silver markets, which means it hits higher highs and lower lows. So if gold's going to go up 10%, silver will go up 15%. If gold's going to crash 10%, silver's going to crash 15%. So there is more opportunity there, and there's more money to be made there as well, given those circumstances. Because silver mimics gold, it's almost like a mirror, and you can look at that, and that's a fact. If you look at the charts, every time I try to compare silver charts, they look almost identical. Silver just does it to a more dramatic degree. So anyways, just to recap, the gold to silver ratio is a perfect tool to use to reflect upon which metal is the better investment. In the 19s, actually in the 30s, FDR changed the gold to silver ratio from 16 to 1 to 75 to 1, over exaggerating gold or undervaluing silver, manipulating these markets. And you can also use the gold to silver ratio to either earn free gold or free silver by simply trading one for another as the ratio fluctuates. And I definitely think that silver is the undervalued metal with the most potential. So anyways, thanks for tuning into this video. If you did enjoy this video, make sure to smash the like button. Make sure you subscribe if you're new, because I do post daily videos. This was Silver Slayer. I'm out. Peace.